We're going to talk derivatives and crypto derivatives, of course, in particular. And interestingly enough, what they may do to bring another billion users into the market. I'm interested to hear how that's going to happen and how derivatives in particular will actually accomplish that. Our panelists today will be moderated by Aliya Das Gupta from Sygnum Bank, and I'll let her introduce all of the fine panelists coming up. Aliya, over to you. Welcome.
Ian, hi. My wonderful panelists, please. I would say if you line up with your headshot.
We're missing a chair.
Oh, sorry. Good point. Thank you. Yes. Thank you so much. All right, good morning, everyone. I know that Jordi Bailina is speaking next door right now, so thank you all very much for being here with us to talk about crypto derivatives. It's really good to be with this specific group of experts on this topic, because I don't think in the crypto market there's anyone else better placed to tell you what's going on with derivatives and also what to be looking out for in the months ahead. But before we dive in, quick round of introductions. I will start. I'm Aliya Das Gupta from Sygnum Bank, and let's go down the line.
Yeah. Hi, everyone. My name is Hendrik Ghys. I'm the founder of Thalex, which is a new crypto options and futures exchange.
Hi, Payal Shah, CME Group. Firstly, thank you for having me on the panel. Incredibly excited for sharing our thoughts. I lead equity and crypto product development at CME Group. And what that means is leading the development of derivatives, so for crypto, especially Bitcoin and Ether, futures and options.
Yeah, good morning. My name is Leinweber. I'm a digital asset strategist at MarketVector Indexes. We are doing digital asset indexes since 2017. So, I count crypto years at dog years. So we do that for 49 years now successfully. And yeah, happy to be here.
Perfect. And
hi, my name is Chantal Bradford. I work at Deribit. We are a crypto derivatives exchange, probably one of the biggest, but indisputably #1 in options. We've got an 80% market share of the total open interest across BTC and ETH. And I run the EMEA institutional business.
Fantastic. All right, so many different topics I want to dive in specifically for each one of you, but maybe just to kind of set the tone, right? What is the current state of crypto derivatives? What sort of trends have you seen emerge in the last couple of years, and where are we today? And maybe I chuck this to Chantal to start.
Well, I think definitely a lot has changed in the last couple of years, especially, obviously, I think, so I joined 2.5 years ago, and back then it was very much a question of sort of us onboarding clients. I think in the last couple of years, particularly since FTX, it's become a much more of a sort of two-way thing. People are expecting a lot more. So last year was very much a building year. We did multiple custody integrations. So Deribit was actually one of the first exchanges to integrate with custodians. We integrated with Copper and Kobo. Nobody used them. After FTX, all the other exchanges started integrating. And we've done Fidelity, Fireblocks, Coinbase in the last year, and we're about to do Zodia. We also got a license, so we got our VARA license in March this year, so we've got regulated, and that license is expected to be operational in the second half, so probably the third quarter of this year. And yeah, I think just transparency, audited financials, custody integration licenses, and being more transparent and growing up and trying to move towards sort of more of a trustworthy, open business.
So regulation, or more regulation, greater regulation is a trend that you're sort of seeing in this space. Hendrik?
Yeah, I think directionally, indeed, the market is going towards more regulation and better infrastructure, but the flows have not yet reflected that. So I think if you look at crypto derivatives volumes today, is still really dominated by perpetuals. And so all the dated contracts, futures and options, they are really under-penetrated, I would say, in the exchanges that focus more towards retail. It's more something that you see in a couple of regulated exchanges like CME. But really the biggest use case today remains sort of the perpetual market. And there is, let's say, a lot of adoption there from institutions that do market-making strategies. So very high volume relative to your capital requirement or your open interest. But there is really not a lot you see of like institutional positional traders. Very often they are still not yet there in terms of being comfortable with basically the non-market risks associated with a lot of exchanges. And so the trend is that we will definitely see that adoption, but it's currently today, it's not yet there.
Yeah, so what we're seeing is a real move to regulated markets and regulated venues. And kind of as Chantal said, the market's maturing, right? So we're seeing clients that want to offer crypto to their clients, but in a very thoughtful way. So to try and remove some of those risks that we've seen over the years. And because of that, the futures that we offer, obviously cash settled, fully regulated, centrally cleared, we've seen a huge increase in demand for those regulated futures. So we're now 30% of the overall futures market, so we command 30% share. And actually, you know, in terms of that trend, of course, the market started very much spot into perpetuals. We're now seeing for Bitcoin a growth in calendar futures. So the volume between perps and calendar futures for Bitcoin is now really equaling out. Still work to do on the Ether side, but really shows that maturation in the markets. The other thing, you know, in terms of trends that we're seeing is this flight to quality. So we've had so much turbulence over the past couple of years, right? FTX, SVB, you know, the list, you could spend the next 40 minutes talking about all of the market turbulence. But that, because of that, I feel that people are coming to regulated venues because of that trust aspect, right? They know what they're getting. So on a daily basis, we're doing 5 billion notional over our crypto suite. And that translates to about 15,000 Bitcoin futures contracts. And really what that liquidity brings for our clients is three things, right? And those three things will benefit the ecosystem. So it's price transparency, it's price discovery, and tighter pricing. So all of that, you know, really pushing forward the market.
Wow. And Martin?
Yeah, it's funny that we speak of calendar futures, right, in crypto.
They should be futures.
In TradFi, it's just futures, right? So a future with a certain expiry date. But as the perpetual swaps are so popular, we say calendar futures. And I have to agree, from the indexing side, when we get requests for an index, it's mainly for these more regulated calendar futures, the likes of the CME or Eurex in Germany, for example. We do that. That's public information also for Coinbase futures. People might think it's a little bit boring, also from the underlying perspective, but that also has to do with regulation. Yeah, so we have Bitcoin, Ethereum, and now we've done, for example, all the Bitcoin forks. Yeah, because that's likely also commodity. Yeah, so you have Bitcoin Cash, Litecoin. I mean, nobody uses that, yeah, to be honest, but that's the next route. And Doge, yeah, finally a meme coin. So my hope is that we see more interesting underlying indexes for futures for the protocols which are really used. Yeah.
I love that you explained calendar futures, because when Payal mentioned it, I was like, I think I know what she's talking about, but it's good that you clarify that.
Normal futures with a new name.
Yes, exactly.
We call them dated futures.
No, really?
No, but the thing is, like, the whole derivative market tends to be quite a small niche within the broader crypto industry, right? And when we want to see more adoption, when we want to see more people entering the space, I mean, this panel is called Bringing the Next Billion Users In. How do you see derivatives playing a role in bringing these people in and also keeping them here, let's say? Payal.
Great question. I think it's about choice, and it's having the right tools to match with that client choice. And what I mean by that is dependent on their risk profile, dependent on their time for a trade, or the time horizon that they're looking, having different tools and access points to match up with that. So for a very long time, we only had spot and perps. which was great for the retail audience, right? It wasn't necessarily good for an institutional investor. Now we've got this huge array of derivative contracts. The ETF markets just make that investment choice a lot easier, right? You can have your stocks ETF and side by side have a crypto. So I think that is what will bring the next billion, having that choice, but also marrying up that risk parameter in what the client is comfortable with trading versus where they can access, right? So, you know, you can access spot, but you might not want to, you might not have the capability of being fully funded. And so it might be a capital constraint, and therefore you might go to the derivative space. If you want ease of access, you may go to the ETF route. So having that choice, I think, is key. In terms of the ETF, I think it's a phenomenal thing for the industry, and it really helps have all of these different aspects, right? So the ability for traders to trade you know, futures or even CME futures and options versus Deribit versus, you know, the ETFs, having that ARB opportunity, having the basis trade really creates efficiencies in the marketplace. And, you know, for us, the ETF thing didn't happen by chance, right? The CME CF reference rate is used for 6 out of the 11 spot Bitcoin ETFs. And it's because of the futures that, you know, we brought to market back in 2017. We were building that market for the last 6-7 years, enable for ETFs to finally come about. So a lot of kind of behind the scenes work, but I think now to take it to the next level, you know, in terms of your question, how do you get it to the next billion? It's education, and I think the ETFs play a huge part of that because they have that distribution network, they have the RIAs, they have the financial advisors. They can actually simplify and take that message out and have more people come into the space. So yeah, really excited, and I think, you know, from futures side, we've seen a huge increase in demand for futures as the ETFs are growing. So there's a need for still risk management, and we're seeing some of that activity come back to futures.
Nice. Would anyone like to?
I think it's maybe less about the next 1 billion users, but maybe also bringing the large institutions in. And I think for them, it's really important that they have the same look and feel in terms of futures, what they know from stock futures or bond futures, for example. Yeah, so I know a lot of people have a problem having cash-settled things, but those institutions love to have cash-settled futures. They love to have it indexed against a benchmark, to have a settlement price, a reliable settlement price there. So, and also, maybe we can also talk about that. I think perpetual swaps, I love them, I like them. But they come also with some costs, right? The funding rate can be huge, so over longer term it can be quite expensive to hold them. And so also the risk of auto liquidation, that's less of a problem for the more traditional futures. So I think, we also need to bring the larger institutions in. That's important.
Yeah, I think also, I mean, again, like I said earlier, like the infrastructure, there's still, you know, lack of prime brokers in the space, lack of capital efficiency. At the moment, you know, there's so many different exchanges and there will be consolidation in the market. You know, people don't want to, like big institutions do not want to onboard to 20 different exchanges. It's a nightmare, and also like, you know, the exchanges in terms of like onboarding people, it's just not going to work like that. So you can onboard with a prime broker, you get the capital efficiencies, and then you just onboard with one person. And actually, maybe somebody would not want to face Deribit directly, but you know, they could easily face sort of a regulated prime broker, and that's how they get around it. I think to Payal's point earlier about, you know, I think a lot of people in traditional markets, like people enter with spot, so, you know, people start trading spot. I think the ETFs have also, you know, give accessibility for a wide range of people. But then the next stage is, you know, hedging. Essentially, people need to hedge, and I think, again, the education, you know, you can do so much with options, and, you know, you can speculate, you can hedge, you can trade directionally, like there's so many different ways of trading them, and I think there's just a bit of a lack of education. And maybe Hendrik said that the big institutions aren't there yet, and I do agree, but I guess, you know, compared to last year, like I think most exchanges last year didn't, apart, okay, CME did well, but more of the crypto natives did not have a great year. Like Deribit, you know, we weren't going like that, but we were kind of going like that because the number of contracts trading in options, like bigger institutions are coming into the space. We work with a company called Paradigm who do our block trade. So that's basically if you want to trade in size without moving the market. When I joined 2.5 years ago, about 10% of the trades went through Paradigm, and now about sort of 35% are block trades. So that just does show that, you know, that really has, like, bigger institutions are coming, more traditional people are coming in, and I think with the licenses, with the prime brokers, with like SOC 2, like everything that the kind of bigger institutions want, we're, you know, obviously it's a slow process, but we're getting there. We're going to apply for a MiFID broker license, and I think that's what, and competition. I mean, I think people don't want to just face one exchange, like having 80% market share, like it's a counterparty risk, right? So people like Thalex, maybe it's maybe it's CME, maybe it's one of the newer exchanges, but you know, one of them will come, and you know, we don't have the 80% market share, but we have 50%. Hopefully, we still have the majority, but you know, the market's bigger, and we're all kind of doing well, and the overall industry is growing, and that's how I see it.
The rising tide lifting all the boats.
Yeah, exactly.
I mean, just to add to that, sorry, that it's not necessarily like in competition with each other. I think it's all, you know, all of our collective aims is to grow the market and to grow that ecosystem. So
yeah, like, I mean, when you guys, you know, we want CME to do well because then everyone hedges on Deribit, so we do well. So it's brilliant if CME gets more customers, and also you reach people we can't touch the US. Like you reach people that we can't reach. Like it's brilliant, and I think still, like if you look at our top 20, like our futures and perps, like top 20 are very similar, I would say, to the CME. But in terms of options, like the top 20 are very, very, very different, and that's because those big, you know, futures traders who their bread and butter is options, but they haven't got to that stage yet because the market's not big enough, as Hendrik was saying earlier.
But I would just also like to add on going back again between the contrast between the perpetual volumes and the more classical traditional finance instruments like futures and options. So I think really overall the derivatives market has really grown by going vertical in that perpetual use case and starting to see the institutions adopt futures and options. But I think the real way to unlock that more horizontal growth is to just realize the natural position in crypto is just to be a long spot, right? And it's a chart that goes up and to the right, but it's a very volatile chart. And so the key challenge that a retail or an institutional investor has who wants to hold Bitcoin, Ethereum, or other cryptos for a long time is volatility drag. And this is across all asset classes, just a mathematical phenomenon of if you have, for instance, something that has an expected return of, let's say, 20%, your volatility is 60%, your compounded growth really gets shrunk to only like 2 or 3% because of variance drag. And the way you can actually manage that is either your position sizing, your rebalancing, or you're using the strategy that, for instance, pension funds use at a very large scale in equities, which is to buy puts and you fund them by selling calls. And so I think there's an incredible unlock of just the whole spot market, right? There's an incredible unlock of open interest and volume in futures and options that could come from just people doing these simple overriding strategies. And I think we should just make it easier for people to do it. It's for institutions to take away some of the concerns associated with these trades, like off-exchange settlement. And for retail, it's I think partly it's education, partly it's just like making good wrappers around it. If you look at Athena, and they built 3 billion open interest or TVL in a matter of months, it shows you just how much untapped demand there is for these passive yield strategies using derivatives next to the active trading that people already do in perpetuals.
Yeah, I love that you talked about Athena, and that is kind of growing on one side, where you also have the crypto indexes now gaining traction on this side. So it's kind of the whole spread of the market, and in terms of market demand as well. But coming back to specifically the indexes, right? And how popular they've become, or what a big role they now play in bringing people into the crypto space. How do you think that this will now drive the derivative product innovation? Like Hendrik touched on this a little bit, but maybe Martin, you can shed some light as well.
Yeah, you know, standardization is super important in finance. Yeah. And a benchmark or an index brings standardization. A good example is pricing. So what is the Bitcoin price? If you ask an US guy, it's a Coinbase price. If you ask an Asian guy, it's Binance or maybe it's a third exchange. You have hundreds of exchanges, you have centralized exchanges, you have decentralized exchanges. So what we do, or what most of the indexes do, is that you build a composite price, mostly a volume-weighted and a time-weighted average price, which is very robust and you can settle against. So that's one thing. The other thing is you still have a lot of glitches, right? We saw that with NYSE. I would love to buy Berkshire Hathaway 99% down, but you very frequently have that in the crypto world, also for the larger exchanges, And so it's really important to have an eye on your pricing source and build an aggregate price. So that's super important.
And maybe Deribit also has an approach to doing this, or?
No, I think obviously more index companies coming in. I think a bit more consolidation.
Unfortunately, yes.
No, but I think again, it's having like an independent third-party index provider. It makes sense. It again brings more credibility to the market, and it makes people trust that. I think we'll see less of people having their own indexes and more of sort of people using the independent sort of third-party.
Pricing, yeah. These are all just signs of the market maturing as well, right? But when we're looking at new types of derivative products, in terms of, and Hendrik, you talked about this a little bit as well, but kind of moving past, there's one side of the market which is more speculative and using derivatives to get more leverage, but on the other hand, you also have the possibility to hedge and use that to kind of protect your position in the market. What other kinds of products do you think we now see we will see emerging for this broader new market of entrants? Hendrik?
Yeah, I think the first thing really that needs to happen before real innovation can take off is just that these outright markets in futures and options gain some maturity, right? It's just structurally there's things that options can do that linear contracts, perpetuals and futures cannot. And especially becomes interesting when you have combinations of options, because you can express a view on the full distribution of an asset. And then there's a lot of product innovation that can come on top as derivatives of those base derivatives, of those base building blocks. Like for instance, DVOL, like the volatility index, which I think DVOL is a great product, but it's not getting a lot of traction. And I think it's just a question of these building blocks first gaining more maturity. So I think so before we start seeing more complex use cases, I think that the simple use cases need to grow. So I think basically what exchanges should focus on is just removing friction for those simpler trades. If you see that basis trades at easily can trade at 50 to 100% annualized yields, then one of the first things you just need to encourage is better, for instance, arbitrage between perpetuals and futures with simple future spread products, etc. Just to allow basically the arbitrage or the straightening out of the prices between these base derivatives. And then once that's there and you have more open interest next to volume, then I think you unlock innovation in general.
Yeah, I couldn't agree more. I think that there's so much still to be done within Bitcoin and ETH. We're trying to bring some of the trading mechanisms that we see across all of our different asset classes into crypto. So BTIC, Basis Trader Index Close, is a very popular functionality that gives certainty at the close. So traditionally used in equity markets, you might want to snap the S&P price at the end of day on the index level and then replicate that into a futures trade. So with a BTIC functionality, you literally do put on a trade. So your BTIC might be the reference rate plus 1, 2, and that converts into the futures. So BTIC is a really nice product to give that certainty. We're also seeing use cases for exchange for physical, so EFRP, especially with the ETFs, so where you can have a spot position and then offlay that with a corresponding futures position. So yeah, a lot to do still within the space, and even in terms of indices, building out that side of the business. So we obviously have the Bitcoin and Ether reference rates, We also have individual coin reference rates on another 20 tokens. But I think that there's more to do in terms of like portfolio, volatility, staking. There's a lot to be built still within Bitcoin and Ether before we move out to that broader landscape, I think.
Yeah, I also like to see more baskets. Yeah, the S&P 500 in crypto, for example. That would be nice. At the moment, I mean, it's enough to hedge your portfolio with Bitcoin, right? But over time, think of it, I think Bitcoin dominance will fall over time. Also, the correlations between the coins should fall, because what has Bitcoin to do with BNB token or a gaming token? Nothing, yeah? But at the moment, everything is super highly correlated, yeah? Small niche of players play the same thing. But it doesn't have to be super complicated, because the market is super concentrated. So a top 10 index, for example, covers 75% of the total crypto market cap. Yeah. I know it's a regulatory hurdle still, but maybe we finally get there next year. Is maybe the year of the crypto ETFs, and maybe we can do also a basket solution or sectors, and it's super interesting.
Yeah, and I think Noah's mentioned structured products. I think that's obviously the big thing that the industry is moving towards. So some of our sort of bigger Asian crypto native clients are offering structured products to their clients. Then traditional finance is starting to offer products to their clients, like a small crypto allocation. Because of us getting our SOC 2, our license and everything, they can now face us, and they need options in those products. So I think we'll see a big growth from that too. And I think that's still very, very small at the moment. We recently launched linear options in March. So linear altcoin options, like, again, very different ways of saying things. But altcoin options, so essentially they're USDC settled. So we launched Solana, XRP, and Matic, smaller coins, encouraging retail to come in, trading different events. And it's still very small, but it's growing at sort of 40% every month. And I think that, I think we're going to touch on sort of accessing retail a bit later, but it does bring retail to the market, having these smaller coins. And then ETF, obviously, we've already spoken about that. That brings new people to the market, and eventually, there'll be options on the ETF, and I'll see that. Again, people ask me, how do you think that affects Deribit? Again, I see it as growing the market. I think, options on the ETF is great. It will grow the market, and it will bring more people, and we'll see benefit from that. You guys will see benefit from that. And then finally is, I think at the moment having to pre-fund all the different exchanges and not having any, any yield on sort of having, it's so capital inefficient. And, now people are working on sort of tokenized money market funds, so we can accept sort of, BlackRock, Franklin Templeton, Hashnote. We're looking at accepting those stable coins as collateral. State ETH, we're going to add Lido. So we've just about to launch cross collateral, so we'll accept Lido as a coin for staked ETH, and then expect to add. We're not going to allow every single one. There are so many out there, and so many people are trying to sell to me at the moment. But I can see us having sort of 10, 20 coins, and similarly for linear, I think we're never going to be one. We're very institutional, so we're 80% institutional, 20% retail. So we're never going to have hundreds of coins like some of the other exchanges, but I see 10, 20. If there's a client demand, we'll launch it and see further growth from that.
I mean, you're speaking also about the institutional side versus the retail side, and the kind of the demands on either side of the spectrum are slightly different. Maybe Hendrik, you could talk about what sort of products are targeting each sort of group.
Yeah, I think the dominant use case is if you simplify, it's just retail doing the equivalent of what they would do in Robinhood with equities. Is they basically trade perpetuals as if they're like zero DTE options, because what they do is they basically put a stop loss, or a liquidation engine puts it for them within, let's say, an average daily move. So basically, you either quickly take profit, or that thing stops you out within a day. And so you see the volume to open interest metrics being very elevated for perpetuals. On an average day on Binance or Bybit, it's 1 to 2. It can easily be 5 to 6 in volatile markets. And so I'm going to repeat a little bit what I said before, but I think, crypto's just been very good at that like high velocity type of trade. And now we just need to bring them into the lower velocity type of trades that are more focused on yield. And I think you just have to make it simpler to do these basic trades. I think.
And you're talking about retail in this case.
Yeah, and I think that's the way to get retail out of this very high velocity use case. And I think the exchanges should offer basically, for instance, the ability to have staked assets as collateral to do, for instance, covered call selling, so that they can structure their own products for the ones that are experienced enough to do it, or that you really facilitate other people to productize those yields. I think that's very important.
So for us, we obviously launched with the standard size contracts. That's 5 BTC and 50 ETH, very institutional sized. For the ETH contract, that's 175,000 notional. For Bitcoin, upwards of 300,000. But we saw that need for retail or the active trader, especially through the COVID years and that real increase in retail wanting to get involved. And a better use of capital for them as well, right? Rather than fully funding on the spot exchanges or being subject to auto liquidations, they wanted something that was a little bit more structured. And so we introduced the micro contracts. So they're tiny, 0.1 Bitcoin or Ether. And so for the Ether contract, your notional size is, $300. So really nice and small contracts there. Interestingly, what we found is, yes, the active trader is using those, and we're seeing, upwards of 75,000 contracts traded on the retail side. But with the ETFs and with like new structured products coming through, institutions are actually using those micro contracts to just like test the water, to dip their toes in. And with ETFs, they're using them to fine-tune their exposure. So they might have, 5 large contracts plus 4 smaller ones to really hedge that risk. Also, in terms of volatility, it may be very expensive to just go into a contract. So, to attract retail, again, we launched Ether Bitcoin ratio contracts. So, the idea of the dominance of one contract versus the other. So you don't necessarily have to take you can take more of a directional view with a ratio type contract. So, I think, retail is a big portion of the market. Event contracts that we launched, I won't speak too much because they are predominantly for a US audience, but, a simple yes/no contract, will the price of Bitcoin be above or below X number? So that, very retail focused, but I think a huge opportunity there.
Amazing. Okay, go ahead,
Yeah, no, I was just saying, we struggle to attract retail. We find it really hard. I think, obviously, there's like a huge US base that we can't access.
Yeah.
And I don't see that changing anytime soon. But again, we've got 1,000 clients, and, OKX, Binance have got like hundreds of thousands of clients. And, education, I think they're spending a lot on educating, and you see these big, OKX are doing quite well at their options at the moment, and you can see these big spikes at weekends because a lot of our players aren't there at weekends, and they can activate these people, and then these people see this other exchange with all the liquidity, and they're like, oh, I'll go and trade on that too. So we like the fact that OKX is doing well with retail because eventually they'll come and trade on Deribit too. Yep. But yeah, I think again, options it's complicated, and with the perp contract, it's there's you don't have that in traditional finance, so options are never gonna get as big as they are in. I mean, they might, but I doubt it because of the perp contract. But I do see that it should get substantially bigger than it is at the moment.
Maybe, sorry, just to double down there, we talked a little bit now about the retail getting excited and coming in and so on. But the institutional players, I mean, overall, if you look at the macro scale, it's still quite small, right? What do you think are the kind of pain points that need to be addressed that would enable more institutional adoption?
It's actually very simple. I mean, in the infrastructure layer, you need off-exchange settlement. Once you have that, then there's already the non-market risk of custody being partly alleviated. Then we still need to have improvements in the clearing functionality. I think that's one of the strengths of CME. But largely, that's still untrusted for the more offshore part. And then you need to have open interest built to a certain extent that large institutions feel comfortable of expressing these complex derivatives views. Yeah, they need a certain size of the market on top of everything else.
Would you add to that?
Very well covered.
I think clearing, maybe we do, and that's what everyone thinks that it's going to go towards clearing. I don't think the market needs it yet. And if it does, I think the people that are active in the market don't need a clearinghouse. Otherwise, all the options would be on CME and they're not. But I think, in 5 years' time, we might be having a completely different conversation. And if it does go that way, I think Deribit will join the clearinghouse. We're not going to do that. We will do everything we can to try and stay relevant and active in a larger market.
Can I quickly tag that?
Yeah.
So one of the ways we try to grow our distribution and encourage a lot of people to attempt to trade an option is because we will partner with other spot exchanges, and we will, let's say, make it very easy for their customers to just try and trade an option on Thalex. Like our first partner will be Bitfinex, and we built an integration so that their customers can very easily onboard with us, transfer frictionlessly, and trade from within Bitfinex on Thalex and back. And I think that model, you see other people trying it now as well. I think Deribit could also try that at some point, where you basically say options is this really complex derivatives product to build. But you have all these spot and Delta One exchanges that would like to have provide their customers exposure to that product. So I bet that we'll see a lot of partnerships like the one we've built with Bitfinex appearing actually in the coming, let's say, 6 months, 12 months. And once you actually have that type of partnership, it can actually morph into collaborations on clearing as well. Because then you can essentially say, okay, this one exchange has an insurance fund, the other one as well. Let's start to actually pool that capital together and really join forces.
Amazing. I mean, I have more questions, but we're nearly out of time. So I wanted to check in the audience. Do we have anyone who's got a question for our lovely panel here? This is, oh yeah, hit us.
Yes, you mentioned partnerships with other centralized exchanges. What about with decentralized exchanges that are doing options?
Yeah. So the problem with these partnerships, ultimately, if you really want to provide, let's say, the efficiency, then you need to be able to offer cross-exchange, cross-margin. And let's say managing the clearing risk between CFI and DeFi is very hard. But for instance, one use case that could be possible is if anybody maybe knows about Ribbon Finance, it's now rebranded to IVO, but they, for instance, had covered call vaults that are essentially tokenized versions of essentially wrapped option trades, right? But where it's ETH, it's an ETH position and a sold call against that. So those things you could tokenize, and then if centralized exchanges say, okay, I'm going to recognize that as value in collateral, you could, for instance, then allow market makers or other participants to hedge a DeFi position with CFI liquidity. And already there's an indirect link, by the way, because all the DeFi options or derivatives are priced in function of the CFI ones, but often there can be price dislocations because it's nearly impossible to actually do an arbitrage. So there are certain types of these tokenized versions of DeFi positions where you remove the clearing concern, and you could think of these kind of product ideas.
Exciting. We have less than a minute, so let's quickly go down and tell me what you're most stoked for in the rest of 2024. Chantal.
I think just this year has been incredible. We've had, March was our best month ever. April was our 3rd best month ever. May was our 4th best month ever.
No, really.
We can't really complain. So I just think, with the elections coming up, it's still very much driven by volatility, Deribit, because the market's still small. So I think UK elections, US elections, I think that's just going to create a really great year from our side.
Fantastic.
Yeah, my hope is that the US momentum is swapping over to Europe. Yeah, we haven't seen that yet in terms of flows. Yeah, so carrier risk should be lower. Yeah, everybody encourage. The wrong allocation is 0%. So these panels are important, these conferences are important, so we need more investors here as well.
Fantastic. Payal?
Wow, I mean, echoing that, key catalysts for us, ETF, the elections and the volatility that will bring, and yeah, growth in the US coming over to growth in EMEA. So yeah, just preparing for that.
Nice.
Yeah, and I'll just add, I was checking the end of year option prices and 200K Bitcoin strikes, 7 delta. So the options markets say it's absolutely possible.
I love
so
it. So much bullishness. I love this energy for the rest of the year. And also, I want to give a quick shout out to Martin, who's written this fantastic book. It's available outside, and also he will sign it for you if you're interested. And until next time, thank you guys so much for this panel.
Thank you.